You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's going on in the world of futures options? Well, let's find out together, shall we? Because it is time for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-engaging, ever-educational, at least we hope so, Options Insider Radio Network. Remember, if you do like what you hear, this show, anything else we're doing here on the network, A, make sure you subscribe to the full network. Otherwise, you're missing out on a ton. B, throw some stars or a like or a comment. Whatever your platform lets you do does help new people continue to discover the content. As we've all seen, there's new people discovering these markets all the time. And then, of course, if you want more content in your life, and man, who can blame you? TheOptionsInsider.com/pro is the place to go. A lot of great guests coming through that Pro Q&A hot seat, answering a lot of questions in the world of futures options. So if you're intrigued by all that, TheOptionsInsider.com/pro, the place to go to learn more. As we learn who's joining us today in the old CME hot seat, I am pleased to welcome back Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to TWIFO.
Thanks, Mark. Good to be here as always.
Did I see on Twitter recently you guys celebrating an anniversary over there at DeCarley?
You might have saw that. Yeah, it probably wasn't us that posted that, but actually on August 1st, we will be celebrating our anniversary. And I think it's I want to say about 14 years, maybe 15 years. So
and you haven't killed each other yet. So that's impressive.
Yeah, we have not, but we've come close.
All right, and let's see what's coming closer, perhaps moving farther away today, listeners, because it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you want to see this report for yourselves, follow us on Twitter at Options. Follow CME on Twitter at CME Group. We both put it out ahead of the show over there. Of course, if you want to get more detail on all these reports, the place to go, bantix.com, BANTIX.com, the place to go. We really just scratched the surface of the data that is available there, listeners. It is overwhelming, but also very compelling if you're intrigued by these markets. And coming into the show this week, listeners, we're seeing a very different report than we saw this time last week when we had Dan Grams on the show with us. It was pretty much all green all the time. You had to struggle to find enough red to make a dark side 5 last week, listeners. This week, not the case. We're looking at pretty much back to 50-50 again. So intriguing stuff. Carley, that means it's pretty much a coin flip. Where do you want to start this week? To the light side or to the dark side?
Let's go dark.
All right. To the dark side we go, listeners. Number 5, we're kicking things off in the metals. Copper getting based here off 2.53% to be precise. It was number 5 in the other direction last week, up about 5.64%. So giving roughly half of that back again this week. And then number 4, going out to FX land. You don't usually see them in our movers and shakers. You got the New Zealand dollar versus the US dollar. Again, not a leading FX pair we normally talk about. Off 2.72% out there this week, listeners. So we're going from metals to FX. And then number 3, one of our frequent offenders back on the list. Not so frequent anymore. It's lumbers. That means we're going to the ags, in particular to the softs, listeners, off a little over 5%, about 5.15%. Man, lumber used to be on week after week for years, almost the entirety of the pandemic period. Lumber was represented somewhere on the show. And then the last couple of months, not so much. So intriguing stuff. Has lumber, have dead trees finally settled down, listeners? I don't know, intriguing stuff. So we have one of our frequent offenders. Let's see if we can find the other 2. And right behind it, we have number 2. We have Bitcoin off 6.69%. So Bitcoin giving up the ghost a little bit this week. And so we went from metals to FX to ags to crypto. And now we're going back to ags, in particular dairy, listeners. For class 3 milk, our number 1 dark side mover this week, off 10, almost 10.25% this week. So a rough week for class 3 milk. So only the dark side, listeners. We've already touched on a lot of different complexes. Let's see if we can keep it going to the light side now. Number 5, we're going back to the ags. It's KC wheat, up 7.66%. It was number 3 in the other direction last week, off about 4.25%. You don't need me to tell you what's driving things to the upside in wheat, listeners. All this Saber Rattling coming out of Russia, really not helping the ags markets, and certainly not the wheat market right now. Nat gas, number 4. So there we are. First time in a while, listeners. We've had our 3 frequent offenders represented on the show again this week. Number 4, nat gas, up 7.77%. If this continues, you may have to rethink our frequent offenders. These 3 have been dominating the tape for so long. It seems weird to have some other names in there, but yeah, there we go. All 3 back on the show again. Nat gas number 4, up 7.77%. I have a feeling Carley's going to want to talk about a little bit of nat gas, but we'll see. Number 3, it's corn, up 9.44%. It was number 4 to the dark side the last week, off about 2.75%. Number 2, still hanging out in the ags. It's oats, up 9.67%. Again, number 2 in the other direction last week, off 4.7%. And the big light side mover this week, take a guess. Yep, Chicago wheat, up 13.99%. So nearly double the percentage move we're seeing in KC wheat. It was number 5 in the other direction last week, off 2.36%. The ags have been coming under some fire of late this week, getting a lot of that back. So intriguing stuff. Again, a lot of this driven by the Saber rattling coming out of Russia and Ukraine. So intriguing stuff. Carley, we've got an embarrassment of riches on the show this week. We've got metals, we've got crypto, we've got a little FX. I'm not sure how much paper there is to sink our teeth into out there. And then, of course, we have an embarrassment of ags. Which of these is catching your eye this week, or perhaps do you want to start the show somewhere else this week?
Let's go for ags. Nothing boring there.
All right, to the ags, listeners, we go.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the ags we go. You guys know where to go if you want to check out these reports for yourselves, the free version at least, cmegroup.com/TWIFO, TWIFO. If you want the full detailed reports, then, of course, bantix.com. The place to go to check those out. There's a free trial there as well you can take advantage of. And now, once we get into that drop down, listeners, ags, obviously it's an alpha order list, so ags right at the top. Then we're going to stay at the top in the product family for grains and oil seeds. Then we have an embarrassment of riches to choose from there. But because it is dominating our light side this week, and also because it's dominating a lot of the headlines this week, I think we have to start in Chicago wheat. Trading 727 and about a half right now as we're kicking off the show, listeners, up 66 handles or right about 10% on the week. So again, the last couple of shows, all this downside we've been seeing in ags, particularly in wheat, I was starting to wonder if maybe we would see a little bit of headlines that would cause some upside action. And lo and behold, that's exactly what we're seeing out there. It's also causing a heck of a lot of paper. 223,000 contracts on the tape right now already for Chicago wheat. So closing in on 250,000 contracts, and the week is not yet done, listeners. So a banger week. Obviously a lot going on in ags this week, Carley, but we have to start in wheat. So what's been catching your eye and what's been going on, and what have your clients been up to in this explosive upside week for wheat, Carley?
Okay, well, the first thing to point out is wheat has had some explosive rallies over the last year or so due to Russian headlines, but we've yet to see one actually hold. And all these rallies have been really sharp and they've been impressive, but they generally fail and roll back over. And I'm not sure this one's going to be any different. If you look at a daily chart on September wheat, the high from today matches a trend line that dates back to basically August of last year. So a year-long downtrend line that we've been in. We kissed that resistance area and bounced off. Also, that same general area, which is about roughly 750, happens to be the 200-day moving average. So as long as prices fail to close above 750, I think it just gets heavier and heavier. And at some point, we start making our way lower again. That's my best guess.
This move this week, I bet you Carley's slinging some risk reversals or some upside here in wheat. I'm sure you got something cooking. What was catching your eye out there in wheat this week with your clients?
Actually, we still have a little PTSD from wheat last year, so we're really a little gun shy here. Honestly, we haven't put anything out in wheat so far. It's on my radar. I'm bearish. I'd like to do something here in the next couple of days, but I'm going to just give it a little more time because I don't trust it at all.
Yeah, once it breaks the 1,000 strike, I think a lot of people had PTSD from that. It's like when crude oil went negative, right? People are still recovering from that as well. Correct. Out there. So fascinating stuff. Is this the apex? Is it going to peter out like a lot of these other ones have, listeners? Or is there more room to run out there? It doesn't seem like the Sabers are done rattling over there, at least quite yet. So intriguing stuff. All right, out to the Chicago wheat we go, listeners. Like I said, a lot of action out here this week. Nearly 250,000 contracts on the tape. The big contract this week in terms of expiration, a lot of it, let's see, about over half, 55% of that going up in the September expiration cycle. So we're going to hang out there. It has about 36 days to go, listeners. And you might be wondering, what is the vol right now in Chicago wheat? You probably would expect it to be a little frothy, given what we're seeing out there, and that is the case. 47 and about a third, up over 11 points, about 11 and a quarter points this week. So wheat vol popping as you would expect. Skew-wise as well, all the action, all the interest was to the upside last week. That seems to have paid off. The calls were 12.3% bid last week. The puts 6.7% cheaps. A lot of people were buying calls and using the puts to finance them. It seems like hard to argue with that play this week. And then looks like it's the same setup this week, only the calls have come in a little bit, which makes some sense. We've blown through a lot of your upside strikes now, so some people may be taking those calls off that they had on last week. The put's still about the same level, 6.6% cheap. The call's about 7% rich now. So folks looks like still financing some of their calls with the puts, but again, that skew has come in a little bit for obvious reasons. The big dog this week. So Carley, this may not improve your PTSD. It's the 800s are leading the dance out here this week. So maybe they're saying we have a little bit more upside to go here in Chicago wheat. Nearly 15,000 of these have gone up this week. 1,400 on Monday, about 1,200 on Tuesday, 5,000 on Wednesday, and then 6,500 today. Weirdly enough, almost the exact same number of the pars, the 1,000 strike, have also gone up this week. Only 3 contracts difference total for the entire week, but they went up in very different days. Almost all of that on the pars went up on Wednesday. 11,400 went up on Wednesday, 2,100 today, and just a couple hundred each on Monday and Tuesday. It was like the lion's share of that was closing on Wednesday for the pars, the 1,000 strike. So interesting. I mean, I can't imagine you made some money on those, obviously, but interesting time to be taking all of those pars off the table if that's the case. Maybe you thought this pop was going to be a little bit more substantial, and when you didn't get it, you just took your pars off the table. Interesting time to be closing a bunch of your 1,000 strike calls on Wednesday. That would maybe support what Carley was saying, that maybe this is all they're going to get, and they're just taking them off while the getting is good. By the way, but the 800s traded more actively throughout the week. Again, it makes some sense. They're closer to the at the money, but still intriguing to see almost the exact same amount of paper on both strikes. 3 contracts difference. You never see that, but it wasn't a roll or anything related. It seems like it was just aberrant paper going on both strikes for almost the exact same amount. That's interesting. Right behind it, we also had the 700s going up 10,500 times. Those now in the money calls. Those also trading pretty evenly throughout the week. The big day was Wednesday again, 3,700 on Wednesday, 2,600 each today, and Tuesday about 1,600 on Monday. So folks pile into these 700s. Makes some sense. They are now in the money as well. Let's look a little bit farther afield, see if we see any other interesting and or aberrant prints going up. A lot of people closing on the 1,100s this week as well, 3,000 times. So interesting. I guess all this upside, they're just taking it off whatever they can. The 940s in October trading about 3,000 times this week as well. So if 1,000 was a little bit too optimistic for your blood, looks like most of that went up in an 860-940 vertical that traded 2,800 times on Wednesday. All opening. So there was no roll there. So interesting. Funky strikes. But again, we've seen weirder. Just look at some of the verticals we were seeing for $1 wide in WTI last year. And then also about 4,000 of the 7/2 in December also traded this week. Those are pretty much exactly at the money because the future in December is trading right around 750. So those are pretty much at the money calls. Traded 2,000 today, about 1,800 yesterday, and not much earlier in the week. So looks like a lot of opening paper on these 7/2 as well, which again makes sense. That is the at the money strike. Well, interesting stuff. But you know what? It's not all about wheat. It's just mostly about wheat these days, listeners. We also have corn up nearly 10% this week, and oats up nearly 10% as well. Obviously, we know oats not going to bring the heat from an options perspective, but we can go out to corn, listeners. Corn, usually the big dog in the ags complex. Again, some of these other weeks, maybe not so much, but that is the case this week. Corn just absolutely blowing the doors off from a volume perspective. If you glanced at this right now, you might be forgiven for thinking maybe this was a light week for 3-month SOFR or the E-mini S&P 500, because that's how much paper corn is putting up this week. 1.4 million contracts already in corn. I mean, usually corn, we're seeing 400 plus thousands. You're talking a million contracts more than that this week, listeners. So just a tsunami of paper here in corn this week. Carley, obviously a lot going on in corn this week as well. What's catching your eye out there first, A? And then B, do you have any remnant PTSD in corn or anything catching your eye out there these days?
Luckily, corn. I don't have any stingers from corn recently, so I'm comfortable there. We basically recommended our clients, or our speculative clients anyway, not necessarily hedgers, but speculators, just move to the sidelines and see what happens, because we actually were buying 550 calls a week or so ago when corn was at support, just in case, using the December options, just in case something happened, and it did. And so we got a little lucky. But this is a good time to really be flat. Honestly, I wish I had a big prediction for you, but I don't. I'm in the business of trying to predict what markets might do next, and I can tell you this is absurd what we're seeing. It's like GameStop, only it's corn futures. So not much makes sense. The best place is probably the sidelines at this point. I'd turn bullish if we get The price we are now is probably fundamentally balanced and neutral. And so there's two things that can happen. It either falls like a rock and we break through support and test like 450 in December corn, or if we do manage to go higher, we're probably looking at top of the range up in the 620s, 625 area in December corn. So what I would look for as an option trader is maybe one of those two price points to either be bearish or bullish, but in between, I got nothing.
GameStop of corn. I like it. I can certainly see it.
What's going on.
Because you're right. I wasn't expecting this much volume on the tape. I knew you'd get some ancillary reflected love from all the stuff going on in wheat. But you're right. This is out of control out here. This is a lot of paper.
It's silly.
Corn sure. Right now, listeners, 537, up 30, almost 30 and a half handles this week, about 6% in that front future. And I said about 1.4 million contracts. The most active is the DEES contract, listeners, 127 days to go, doing about 35% of the paper. So we're going to hang out there. Man, this is a lot of corn paper. I can't recall another week where I've seen 1.4 million contracts, let alone that much north of 1 million in corn. So, wow, this is impressive. And or terrifying, like Carley was alluding to out there. That DEES future is at about almost a 550, so a little bit higher out there. What is the vol right now in June corn? And again, someone was just asking us one of our shows about vol across all the different asset classes, if it's all coming in. And the answer was pretty much yes until this week in the ags. Man, it's coming back. They're getting a lot of vol back this week in a lot of these ag products, including in corn. Corn about 32 1/3 right now in that DEES future, up about 8 points. That's a lot. Up 8 points from vol this week. My goodness. Skew-wise, the puts last week, it was all puts all the time. 3.2% bid were the puts. The calls, nobody wanted them. They were 2.8% cheap. That appears to have been the wrong move, listeners. This week, the puts are now pretty much flat. They're about almost 1% bid, and the calls are about 2% bid. So the calls, not as bid as I expected. I think maybe that's because we're looking at DEES. That's a little bit of a ways out. If you look a little bit closer on the term structure, you're starting to see some of the, as Carley alluded to, the nonsense, the GameStop type bids. Yeah, the calls in August last week were 18% bid over the at-the-money vol. So that's kind of what I expected when I first ran these numbers. I thought a little bit more aggressive upside. The contract's going away in about 2 weeks. They're about 4.5% bid. So there is a little bit more juice to the upside if you get a little bit closer to the fire. That makes sense. A little bit more gamma in some of those contracts. But yeah, wow, just a lot to unpack here, listeners. In terms of the most active contract in corn, in this just explosion of corn paper, listeners, it was not in the DEES contract. It was actually in September. It was the September 450 puts, going up almost 61,000 times this week. Almost all of that yesterday, listeners. Almost 51,000 450 puts going up yesterday. The rest of the week, almost incidental at that point. Again, total of about 61,000. Looks like most of that paper was closing yesterday, so apparently a bunch of folks bailing on the 4.5 puts in September yesterday, which again, given this move, it might make some sense. But then again, if you also think this move is kind of ridiculous, maybe you want to hold on to some of those puts. Either way, interesting stuff. Of course, if they were short a ton of them, maybe they're taking this opportunity to buy those puts back. Let's look at the skew really quickly, see if that can tell us what was going on. And you know what? The skew came in about 2 points there, so it doesn't seem like there was a aggressive buy to close move. It seems like they were mostly dumping those puts. So interesting stuff. Again, if this move is, maybe they're buying into this move and thinking, we're not going to threaten 4.5 again anytime soon. They still have 36 days for those puts to go, but clearly not enough time there. Listen, anything else in September? It looks like now we go back to December, listeners, for the 500 puts. They went up 43, almost 44,000 times this week. Listen, it's a big day for those. Also Wednesday. Wednesday, obviously the banger day of the week. 22,000 yesterday, 8,000 today, 9,500 on Tuesday, and about 4,000 on Monday. Man, these numbers are just crazy for corn. Looks like opening most of the week except for Tuesday. They were closing on Tuesday. So 500 puts. And then behind that, we have the 600 calls. So finally, we got some calls Interesting. All this upside and no calls to be found. 600 calls in December, going up 37,000 times this week. Again, the big day, Wednesday, 18,500 on Wednesday, 9,000 on Tuesday, 6,000 today, 3,000 and change on Monday. Looks like opening all week long. And again, we're exploding to the upside, so not exactly surprising that we're seeing size opening on the calls. That's kind of what I expected coming in here today. So to see all these puts trading is kind of fascinating. And right behind it, if 600s was maybe a little bit too optimistic, a little bit too rich for your blood, how about the at-the-money calls, the D's 550s? Those traded 30,000 times this week as well. The big days for those was Tuesday. 9,500 on Tuesday, 9,200 on Wednesday, 6,000 on Monday, 4,500 today. Looks like they were opening earlier in the week, actually closing some on Wednesday, which again makes sense. 550, now the at-the-money strikes, so if you loaded up on those earlier in the week, now that those are at the money, maybe you're taking some of those off. Intriguing stuff nonetheless. Let's dig around here a little bit, listeners. There's so much paper. We could probably spend the rest of the show just parsing all things corn here. Let's look really quickly some other interesting and or aberrant strikes. The 4.5 puts, we were just talking about those in September. They also traded in December, 24,000 times. The big day for those, Wednesday, 10, almost 11,000. 6,600 today, 3,500 on Tuesday, 3,200 on Monday. Unlike the September, mostly opening. So maybe the folks who were bailing on the 4.5 puts in September, maybe they were rolling to December. It certainly is possible. Interesting time to be rolling those puts, but we've seen crazier things out there. And then also, if you want, the 550 is not optimistic enough for you, but the 600s in December, a little bit of a bridge too far. Allow me to present the 560 calls, going up 27,000 times this week. Half of that almost on Wednesday, 13,000 on Wednesday, 8,600 on Tuesday, and then 2,500 each Monday and today. Seems like mostly opening throughout the week on those as well. Carley, we could probably spend the rest of the show just parsing all this corn paper. Did any of that come as a surprise to you, like the September 450 puts? And anything else catching your eye in the world of corn in this kind of crazy week?
The 450 strike doesn't shock me because based on my chart work, that's exactly where we'd go if we broke trend line support. There's like a trend line that dates back to July of last year, and it comes in December corn right around the 480 area. But if that broke, we were kind of expecting 40-50% slide right away, which didn't happen. It held and we rallied. The interesting thing is, though, for me, to see all these big volume and volatility numbers come out, it's great for speculators that happen to be on the right side of it, but I can't help but feel bad for the farmers. I mean, imagine trying to budget your business operations in a market like this. And once the volatility explodes, it becomes really difficult for them to hedge their price risk. So hopefully they had done so in advance before all of this chaos. But anyway, don't forget about the farmers.
I got a little excited, Carley, when I saw all this upside in the ags, all these numbers going up. I thought maybe this is the week. Maybe this is the week oats can finally put up more than 3 contracts. And the answer is yes, but we're not talking thousands or 82. So we got 82 contracts on oats. So that's something, listeners. But if you're asking why aren't they doing oats, it's number 2. That's why. Listen, and KC wheat coming in at number 5. Only 11,000 contracts there as well. So when I talk about that dichotomy of volume between Chicago wheat and KC wheat, it's pretty stark this week. Almost 250,000 for Chicago wheat, 11,000 for KC wheat. So a big volume difference. Any other ags catching your eye this week you want to touch on, Carley, or should we roll on to another complex?
Soybeans have my eye, so let's try soybeans.
All right, so I'll pull that up. While I'm doing that, why don't you regale us what's catching your eye in the land of the beans?
Right. So we had a planning report a month and a half or so ago that caused a really big sell-off in corn and a huge rally in soybeans. And that's something you generally don't see. And it pushed the spread between corn and soybeans to about 275-ish. That's considered extended for that spread. I should say ratio, not spread. Sorry. So basically the idea is beans should not be 3 times more expensive than corn. It should be maybe more like twice as expensive in a more normal environment, and we stretch that to the limit. And so what we've kind of been looking for is a repricing of that ratio, which would be bullish for corn, which we already seems to have gotten that move. And then I think it's going to eventually be bearish for soybeans. I've got pretty heavy resistance around in November beans around 1425, 1430, and so far that's holding. If the market can crack back below like the pivot area, which is about 1390, I think we start rolling over in soybeans. I know there's a lot of fundamental stories that are suggesting the opposite, but the reality is Brazil and Central America runs 2 crops a year. They're getting really, really good at what they do. And there's a good chance that the numbers that the market reacted to a month and a half ago come back to more normal levels as we get revisions and we get deeper into the summer. So that's what I'm watching.
Let's see what's going on out there in the world of beans. You're at that ratio a little over 2 to 1, not that far off right now with 1494 in that front future in the beans, listeners, which is going out in about a day. So intriguing stuff. Once that one goes away, we drop down to about 14 and a quarter out there. So a lot of juice priced in to that front contract, which again makes sense given all the action we're seeing out there right now. Speaking of action, 357,000 contracts on the tape for the beans this week. That's a lot of paper out there as well. I guess the only contracts I can't keep up this week are oats and KC wheat. Everything else is on fire in the ags complex this week. And of that, 43% is going up in the November contract this week. So we'll hang our hat out there. That future is at a 1403. So as we see, very backward term structure right here for the front portion, at least for the beans. Then you get a little bit farther out and it settles off quite a bit. In fact, you get out to 2024 and they're below 1300. So intriguing, very backward term structure here for the beans. In terms of the vol, listeners, what is your November vol in soybeans? It's about a 24, up about 1.25 points. So volatile, but not explosive. If you want explosive, you got to get that front contract going away in about a day. That's about a 36. But again, vol with a 1 day to go contract, kind of a bit of a meaningless number. Well, let's get out to the skew. Last week, the puts 2.2% bid. This week, they have swung the other way, nearly 6% cheap. So that's a pretty interesting swing. And then the calls last week, 1.1% cheap. This week, about 7% bid. So both the puts and the calls swinging entirely in the opposite direction. That is interesting. And in terms of action, what's leading the dance? I said we're at about a 1403 in that Dees future. It was, not surprisingly, maybe the at the monies, the 1400 calls, listeners, leading the dance with 17,500 contracts. Pretty active all week long, actually. 5,200 on Tuesday. About 5,000 yesterday, 4,300 today, and about 3,000 on Monday. Seems like opening earlier in the week, closing later on in the week, again, makes some sense as we rally north of that at-the-money strike. These calls start to go in the money. People start taking them off later in the week. Right behind that, we have a little bit more optimistic. We have the 1,500s. They did about 16,000 contracts this week. Again, the big days, Tuesday, 6,500, and then 6,000 on Wednesday. 2,000 on Monday, 1,200 so far today. Opening seems like all week long on those, which again makes sense. We haven't blown through that strike yet, so people may be waiting a little bit longer to start taking those off. And then behind that, number 3, we have the 1,600. So it's pretty much a call strip, which quite frankly was what I was expecting when we logged into corn there, just to see all those puts. That was kind of interesting. But again, there was so much paper, probably a little bit of everything. Pick your poison out there in corn. The 1,600s coming in number 3 this week in November. 11, almost 12,000 of those going up. Almost all of that on Wednesday, though. About 8,000 on Wednesday, almost 2,000 today, then almost 1,000 each Tuesday and Monday. So interesting stuff there. A little bit more backloaded paper there on the 1,600s. Let's just scan around really quickly, see if we see any other interesting and or aberrant or just maybe head-scratching prints out here, listeners. And, it seems like it's mostly in that November contract and then the contracts right around it. That's where all the action is this week. We got 1,400s trading in October, 2,500 times, 1,500s in September, about 1,800 times. Again, nothing earth-shattering. Oh, here we go. We got the 1,500s in take it back. The 1500s in September actually went up. The calls went up 9,000 times this week, almost 10,000. It looks like closing mostly. So maybe we have a bit of a roll going on out here. So, it looks like they were closing 3,300 times on Tuesday, 2,000 on Wednesday, 2,500 on Monday, and about 1,200 today. So folks bailing on the 1500s in September, almost 10,000 times today, and then maybe rolling them out a little bit to, let's just see if we saw about 15, almost 16,000, so almost 2x that, about 1.5x that going up in November. So maybe there were some folks rolling out there. Intriguing stuff here in a decent amount of paper also in soybeans. All right, we hit on wheat. We joked about oats and KC wheat. We hit on beans. We hit on the big dog, which is corn. We've already consumed a lot of the show just on those products out there. But I know, Carley, you're always a sucker for a little bit of nat gas. I think we're going to head out to energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the always interesting world of energy. Pop out of that drop down to ags. They're at the top of the list, obviously. We're going to go down about 2 slots to energy. Then we'll go over to product family, and we're going to go down 3 more slots to nat gas. And that's where we're going to hang out right now. 275, and that front future is going out in about 6 days. So quite a rebound from the roughly, I think, 2.25 or close to it we were hanging out at the last time you and I chatted, Carley. In fact, you had a pretty prescient call. I think it was the SEP 3s you were very interested in the last time we chatted. Seems like those have worked out pretty well, Carley.
Yeah, so we definitely had a nice move in nat gas. It hasn't been. I don't think I don't want to say never, but it might be a long time before we see the kind of nat gas market we saw in 2022 and 2021. So hopefully people have tapered their expectations. But this has been a pretty nice move in gas. The problem is we're coming up against some resistance here in the $2.80 to $3 area, and seasonality shifts to the downside for the next 3 weeks to a month and a half. And the reason being we're kind of in between hot and cold seasons. And so there's generally just kind of a drop off of demand during this time of year. So if you did make some money on the long side, hopefully you were able to take money off the table, because going forward, path of least resistance might be lower, at least for the next handful of weeks, let's say.
No more love for the 3s, huh? You're out. You're moving on.
Nah, yeah, for now.
You got some 2 puts, maybe 1 3/4 puts in your back pocket, Carley. What are we looking at?
I'm not really interested in playing the downside, but I will say that I'm not long-term bearish. So let's say we do get a pullback, then it's probably time to load up the boat on call options. If the vol's big enough, maybe we even sell some puts. We'll have to see how it goes. But this is more of a get ready, wait for a pullback, and try to buy some calls on the cheap.
Yeah, it's hard to get excited about puts around the 2 strike. 3 calls, you can certainly get excited about those all day long. 2 puts, not exactly going to get to most people excited out there. Let's see how many people are excited this week. It looks like a pretty active week, but kind of back to the numbers we're used to seeing out here. Maybe a little bit rich from a volume perspective in nat gas. Listen, usually we see around 400, maybe 450. We're at the upper end of that right now, right around 461 in nat gas. So a decently active week out here. Like we said, that front future at about a 275. And that's also where the lion's share of the paper, about 27% went up. And then 26% went up in the front SEP future. So nat gas starting to act a little bit like an equity. It's not quite 0 day, but very near dated. That second contract, obviously, a little more than a month away. So that's a little bit longer term, but still interesting. In fact, if you add the front 3 contracts together, so you're talking September, and then you got October out there as well, then now you're talking about 3/4 of the paper out here. So nat gas, very front-loaded out here right now, which, again, is kind of interesting. Maybe is that an argument? Do we need 0-day contracts in nat gas? If a product merited it, the nat gas could certainly be in the discussion. It has enough action, has enough vol, even if that vol is kind of going away today. So tell you what, we'll do a little bit of a combo, listeners, because it's kind of hard to talk vol with a couple of days to go, but we could endeavor to do so. We'll start with that 6-day to go contract. The vol out there at about a 54, off about 2 3/4. But also, if if you know a lot about nat gas, vol in the 50s is actually starting to get a little bit low. We have seen it in triple digits not too long ago. So you're talking roughly half that right now. The SEP contract, a little bit longer term, a little bit frothier at about a 58 and a third, off nearly 4 points, but still coming in fairly aggressively this week. So, nat gas is one of the products we typically point to and say, hey, look, there's still a little bit of a bastion for volatility there. It's getting lower now, getting a little bit smaller out there. So intriguing stuff. No longer are we looking at 90, 95, 100 in nat gas from a vol perspective. In terms of skew, in the near-dated contract, it was all about the upside last week, and it seems like that paid off. They were 5% bid the calls last week. This week, they're pretty much flat. The puts have stayed pretty much the same. It looks like they swung a little bit. They were about almost 2% cheap last week, and they're almost 2% bid this week. So a little bit of evolution on the put side. In terms of skew for the longer-term September contract, going out a little over a month, looks like it was pretty flat to both directions, about 1% premium in both directions last week. This week, the puts taking the lead, so maybe, Carley, they're listening to you and seeing a little bit of near-term downside in the offing for September nat gas. About 5% premium to the puts this week. The calls, a little bit of a discount, 1.6% cheap. So, yeah, a little bit longer-term, nobody wants. So you go out even farther, you go out to the October cycle. So now you're talking about 70 days, listeners. And that bias is even more pronounced. The puts are about 8% bid and the calls are about 5% cheap. So definitely fading the heck out of the near-term upside here in nat gas. So yeah, I guess I would echo Carley's sentiments. If you had those threes, you had some upside in your back pocket, hopefully you got the heck out of Dodge at this point. In terms of the most active contract this week, in this decently active week, it was the two puts here in October. So these have almost 70 days to go. They went up this week about almost 25,000 times. The big day today, actually, almost 9,000 today, 5,300 yesterday, 5,000 on Tuesday, and about 5,000 on Monday as well. So folks, looks like they've been piling into these, so they've been opening pretty much all week long. And now if we look at the, again, the skew also telling us that skew getting juicy as well. So it looks like folks are opening to buy on the two put strike. Again, as I was joking earlier, hard to get too excited about that trade, but I can certainly see some of the logic behind it. Intriguing stuff. And then behind it, though, if you're saying, you know what, I'm not done with the upside quite yet in nat gas, then allow me to present the September 3 calls going up 16,500 times. Some folks coming to play still in the upside, listeners. The big day is actually today, about 5,200 today, 4,600 yesterday, 3,800 on Monday, 2,800 on Tuesday. It looks like they were opening earlier in the week, then folks have been bailing on them later in the week. So maybe they were a little bit more optimistic, and then now they're just getting the heck out of Dodge. The fact that these skews have all been crushed to the upside also showing that folks probably not looking to hold on to a lot of calls right now. Let's look here really quickly. Also have, if the two puts a little bit too far out for you in terms of downside strike, and the 3 calls, maybe you're not feeling those as well. You want something a little bit, shall we say, more middle of the road, then allow me to present the 2 half puts that are going away in about 6 days. These have put up 14, almost 15,000 contracts this week. The big day for those actually today, 7,000 today, 3,600 on Wednesday, 2,200 on Tuesday, and about 1,900 on Monday. It looks like people have been bailing on these most of the week, so that's kind of interesting. Getting the heck out of Dodge on that put skew. Again, the puts got a little bit bid over the course of the past week, not as aggressively as we're seeing in other terms, obviously because there's not much time left for something to happen on these puts, but intriguing stuff here nonetheless. 2 half puts going up nearly 15,000 times. So if you wanted a near-dated downside play, maybe that one floats your boat. Won't be that expensive because only a few days left on these bad boys. Let's go a little bit farther out to see if we see any other interesting prints here, listeners. And again, once we get past this seasonality, we get out into Q1, early Q2 of next year, we start seeing some 6 handles come into play. The 6 calls trading pretty actively, about 1,000 each, just about every month. So again, looks like we used to see those types of trades, those structural strips going up. Usually it was puts, 1.5 puts, 2 puts, 2.5 puts. Looks like they've shifted to the calls now with 975 of these 6 calls going up in just about every month next year, from January all the way out to looks like at least, actually looks September, Now they have them in October as well. So yeah, a strip of 6 calls, about almost 1,000 each in just about every month next year, listeners. So again, that's where the strip is this week. Someone loves their strips out here. Carley, have you noticed these kind of funky strips in nat gas in the past? And again, usually they're on the put side. These days, looks like somebody's got an axe to grind on the 6 calls next year. Carley, what do you think of those?
I think it's an interesting strategy. I mean, paying for that kind of time is really expensive and liquidity is an issue. So, I mean, obviously this type of strategy is basically they just want a foot in the door and no matter what the cost is. And I mean, the way commodities work is commodities generally are in bear markets more than they're in bull markets. So, but the bull markets are bigger, stronger, faster than the bear markets. So a strategy like that is just hoping that eventually, without fail, commodities eventually come back to life. You know, they're dead for a year or two and then they come back to life and have really big wild rallies. And that is trying to play that. It's not my cup of tea, but I mean, I can see what they're trying to do.
It's interesting. They traded every day of the week too. So it wasn't like one print. Yeah. It's just a weird, very, very weird one out here. Maybe they're looking for a little bit of Saber rattling on the nat gas front, like they're getting in wheat right now, right? So weird stuff, but they don't know when. They're just kind of taking it all. Take the whole year. Why not?
Just in case it happens.
Why be decisive when you can just get the whole year? Well, Carley, we hit on a lot of fun stuff already. We're already kind of coming up against it. We've been gassing on these 2 complexes, but there's a lot going on there, so it makes sense. Before we roll out of the show here, any other complexes you want to hit on this week?
I'm going to stick my neck out and say that we may be seeing an uptick in volatility in the stock indices very soon. The seasonal top, according to the stats that I'm looking at, is basically right now. So I'm not a doomsayer. I'm not looking for some sort of crash, but I think a really good, healthy correction in the stock market is probably going to happen sooner rather than later. All
right, then I guess we'll finish up in the ever controversial world of equities, listeners.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the ever-evolving world of equities. I guess these days it's mostly been evolving to the upside. Today, not so much. Taking a break today, finally, from the omnipresent bull. Looking out here, let's go pop down 1 slot from energy. Listeners, go into equity indexes. And you know where we're going to start. You don't need me to tell you. It's going to be the E-mini S&P 500, which is looking a little bit like corn, or maybe 2x corn right now. A little over 3 million contracts, about 3.3 million on the tape for equities this week. Again, it's an interesting week when corn is even in the conversation with the E-mini out there. So impressive stuff. Still net up about 29 handles, or about 0.2% on the week, even factoring in today's sell-off. Carley's talking about vol. You can't really talk about equities without talking about the flip side, which is vol. And the fact that there isn't a heck of a lot of it left on the equities front, even though we're seeing a little bit more juice getting factored back in today. A VIX, when we kicked off the show, a little bit shy of the 14 handle, about 1380. Puts it up about 1/4 point from where it was this time last week. VVIX, a little bit north of 92. That's, of course, the volatility of volatility, listeners. That has come in quite a bit as well, over 5 points from our show last week, when it was threatening triple digits not too long ago. And whenever that happens, you usually have to sit up and pay attention. That's starting to come back in again. And then vol Q, which is the at-the-money vol of the NASDAQ 100, at about an 1810, up about 1/3 point when we kicked off the show. Again, kind of a weird day out there. The S&P was selling off a little bit. The NASDAQ selling off very hard. And then, of course, the Dow rallying out there today. So that puts that VIX to vol Q spread, that NASDAQ to S&P 500 vol spread, at about 4 1/3, which is kind of treading water from where it was this time last week. It's already pretty wide. It'd take a lot to make it get much wider than that. So intriguing stuff out there. Carley, you were just talking about equity vol. It seems like things have maybe found a near-term floor, but of course, now that I say that, watch, we'll break through the 12 handle again next week from a vol perspective. But what's catching your eye out there? And also, what are your clients up to these days? Are they seeing these kind of frothy market valuations and these kind of low or lower, I should say, vol levels? Are they calling you up saying, hey, I want to keep riding the upside train? Are they starting to look to hedge? What are you hearing out there?
Well, what we've been encouraging clients to do is use, you guessed it, risk reversals, whether they're speculating or
hedging.
hedging.
I knew you had one somewhere in your back pocket this week, Carley.
Yeah, exactly. So we're basically selling calls, buying puts, and seeing what happens. Because the idea is, before today, the calls were pretty frothy, and the puts were really, really cheap, and that's starting to flip. I mean, today's only one day; it doesn't change the trend, but I think it's a good start. And you have to keep in mind, this big rally occurred for many reasons, but one of the primary reasons was the whole world was short. We were sitting on the biggest net short futures position in the history of E-mini S&P futures just a handful of months ago, and that's not all the way, but it's a big chunk of that. Over half of that's been unwound, and that's what put a lot of the upward pressure on stocks. And we also had a situation where not only were they short futures, but everybody was buying puts because they were hearing about recessions, and the expectations were for much lower stocks, and we got the exact opposite. And that's kind of this rally was needed to work all of that frothy speculation out of the system, and I think we have. And so I think now it's time for prices to move the other way for a little while. Again, I'm not looking for a crash or anything, but wouldn't be shocked to see 4,300 again in the S&P. So that's what we're hoping for.
You heard it here first. Carley calling for an apocalyptic crash, 2,300 in the S&P by next week. So get those puts on.
Right.
Get those puts on now, listeners. I was just trying to parse this just tidal wave of paper here in the 3.3 million contracts, listeners. So just about every month is putting up size numbers out here. Intriguing, the leading contract this week, that just shows you how much upside we have in the market now, listeners, because it's not just the nonsense 37 quarter puts. Those are still number one, but by a smaller margin this week, 46,000 of those versus we have actually calls to the upside, 36,000 of the 46 half calls going away in 8 days, the 4,600 calls going up 33,000 times today. So the fact that calls are even in the conversation with this, picking up the nickels in front of the steamroller trade that goes on every week here in the E-mini, that shows you maybe how much upside we have in store for us. By the way, we were talking about it last week on the show, just how front heavy the E-mini S&P is. I said there's 3.3 million contracts on the tape this week. If you add up just the front two contracts, so the contract expiring in about 20 minutes and the contract expiring in about a day, just those two contracts, you have exactly 40% of that 3.3 million contracts. So well north of a million contracts. Just in that one 24-hour expiration cycle, that's how much is going to go away. Now, obviously, they've been trading all week long, so it's not quite just 0 day. But again, shows you just how active the very, very near portion of the curve is in the equity option space these days. If you add in one more cycle, if you go out a whopping 4 days, now you're at pretty much half of the paper. It's stunning how the 0 day revolution has just changed the way people look at and use the options out there in the E-mini. Let's go out an eternity. Let's go out 8 days, because it seems like outside of the nonsense puts, the biggest trade this week are the 46 half calls, again, expiring in 8 days. They've traded 15,000 on Wednesday. Looks like paper bailing on those. 11,000 on Tuesday, paper mostly opening. 7,000 on Monday, and about 2,000 today. So it's like they were putting them on earlier in the week and then getting the heck out of Dodge later in the week. And again, given some of the moves we saw this week, makes a certain amount of sense. And right behind it, the 4,600s expiring tomorrow. Let's see if they followed a similar pattern. You know what? Folks were bailing on these from the jump. They were closing all week long. 11,000 on Tuesday, 10,000 on Wednesday, 8,000 today, and about 4,000 on Monday. So folks just getting the heck out of Dodge on the 4,600 calls. And again, that strike just sounds so lofty, but that's kind of where we're hanging out there right now, listeners. Let's see if we can get past some of these crazy puts, see what else was trading out there. How about a 39.10 put? That's still not that relevant of a put. But it looks like they were doing some put spreads finally, not just selling the 37 quarter puts, but also selling the 39.10, 37 quarter put spread that went up 24,000 times. There's so much tiny put paper out here, listeners. It really does kind of, and you take all that out, and that's where a lot of that paper is, in that front portion of the curve. How about the 4,050 puts expiring in 6 days? Listen, these traded about 13,000 times this week. 6,000 today, 6,000 yesterday. The rest kind of scattered earlier in the week. So like a paper opening on those, unless they came back and took them off today. But I don't know why you're bailing on the 40 halves. But intriguing stuff out here. Again, 3.3 million contracts, listeners. So we could literally spend the entirety of the show on it. But it does seem like once you strip away the noise, a lot of 4600s, a lot of 46 halves. Let's go out a whopping 29 days, listeners. The 4600s also trading out there about 11,000 times this week. And again, kind of straight throughout the week, active every day of the week, slightly closing on Tuesday, the rest of the week opening out there. So 4,600 and above calls, and then a whole bunch of nonsense puts. That's pretty much what we've got going up out here in, let's see, it looks like the 3,700 puts in October going up as well. That's an interesting strike. That's obviously much longer term. They've traded pretty actively all week long as well. Looks like opening earlier in the week and then closing later in the week. Again, 3,700, we could threaten that by October, not obviously in a couple of days, but intriguing stuff out there. So yeah, far out of the money puts also still pretty active. I'm just looking really quickly here, listening. It looks like that seems to be the lion's share of what we have going up out here this week. All right, everybody, that music, that crazy loud music, there we go. That music means we have come to the end of another epic journey through the world of futures options. Didn't really hit on copper this week, even though it was in our movie shaker. They did 21,000 contracts this week, so not nothing out there. Didn't really get on Bitcoin. If you want to listen for a lot of Bitcoin talk, check out our crypto rundown program every Monday, or of course after the fact on the network podcast feed there. Obviously spent a lot of time talking. We had the folks from Deribit on this week. That was fascinating. Of course, they do the lion's share of the crypto derivatives volume around the globe, so intriguing to see what they have cooking over there. I encourage you, if you're intrigued by that, check those out. Carley, that music means we are done for this week. Again, a fascinating journey. But before we go, if folks are intrigued, they want to check out what you have cooking over there in the land of DeCarley, where should they go? What should they do?
So the best place to reach me is DeCarleyTrading.com. It's DECARLEY, trading.com. There's lots of free educational material, videos, articles, all kinds of fun stuff. You can sign up for a free trial of our newsletters. And if you're on Twitter, catch us at Carley Garner is the handle, CarleyGarner.
There you go. Check them out. You can always check out her books as well, including Higher Probability Commodity Trading, Trading Commodity Options with Creativity, or if you're new to the game, A Trader's First Book on Commodities. And of course, you know where to go if you want to check out these reports and everything else CME has cooking, including Fed's coming up. May want to check out the Fed Watch. Only one place to go for all of that. CMEgroup.com is the place to go. Of course, you want to start your journey at the /TWIFO. Where you go from there is up to you. A lot of great content to be found there as well. That's going to do it for the content on our network today. Back again tomorrow, noon Central, 1 p.m. Eastern, with Volatility Views as we parse all this craziness going on in the world of equity volatility. Back again after that, exclusively for you pro folks, with Options Oddities. And yeah, there's a lot of weird paper going up these days, listeners. So tune in to Options Oddities if you are intrigued by it. If you want to check out Options Oddities and everything else, head on over to theoptionsinsider.com/pro to learn more. All the details are there. Then, of course, we're back again next Monday with our usual kickoff shows all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.